Imagine turning a simple $10,000 account into a massive $1.1 million fortune in just 12 months. If you do the math, that is an astronomical 11,300% return in a single year. It sounds completely impossible, but a legendary market veteran named Larry Williams did exactly that. And he didn't do it by gambling or chasing blind hype. He engineered a systematic approach to volatility that allowed him to extract fortunes from the market with absolute precision. If you're trying to scale your own accounts or build consistency, you're probably asking the exact same question I did. How did he actually execute this? I spent days breaking down his exact historical framework, and what I uncovered is a masterclass in reading market momentum. It's called the Larry Williams Volatility Breakout System. It is sharp, it is highly effective, and today I am giving you the complete implementation step by step. So smash that subscribe button and let's dive straight into the charts. The entire foundation of this strategy revolves around a single classic volatility tool, the Donchian Channels Indicator. To set this up on your charts, head over to the Indicators tab, search for Donchian Channels, and add it to your screen. Now, the default settings will not work for this system. Go into the Indicator Configuration panel and change the baseline length to 96. I also recommend changing the channel lines to red to keep your chart visuals completely clean. Before we move forward, a crucial technical note. This exact indicator framework was specifically optimized for the 5-minute time frame. If you intend to deploy this on higher or lower time frames, you must perform your own backtesting to adjust the period values accordingly. When you look at the Donchian channels, you will see 3 distinct lines. The center line acts as a dynamic mean reversion point for the market. This means asset prices are naturally attracted to this level, almost like a magnet. You can use this baseline to instantly gauge market bias. If price is trading strictly above the median, the momentum is heavily bullish. If it falls below, the bias switches to bearish. The upper and lower bands represent key historical structural barriers. In standard ranging markets, price will frequently test these bands and reject them. However, this system treats them as explosive breakout triggers. When momentum surges and price breaks completely outside these boundaries, a massive macro expansion typically follows. And that is exactly what we are hunting. But there is a major trap with standard breakout systems, a flaw that completely wipes out undisciplined traders. During quiet market conditions, when price begins moving sideways in a tight consolidation, the upper and lower bands will contract, pinching closely together. This means even a minor low-volume market murmur can trigger a false breakout signal, pulling you into a losing trade with zero follow-through. To filter out these traps and ensure we only execute high-probability trades with heavy institutional backing, we need to layer on 2 additional confirmation filters. First, go to your Indicators panel and search for the Larry Williams Large Trade Index, or LWTI. This specialized tool isolates institutional volume from retail noise. Open the settings, change the period to 25, and set the smoothing length to 20. A higher period allows the tool to accurately filter out short-term micro-trends on our 5-minute chart. Second, we are going to add a standard volume indicator, but with a crucial twist. Go into the volume settings and change the moving average length to 30. In the Style tab, enable the volume moving average and turn the line white. This moving average acts as our structural baseline. proving whether a breakout has genuine market participation or if it is just an algorithmic trap. Here is your exact execution blueprint for a long position. Step 1. Price must expand upward and print a clean candle touch against the upper red Donchian band. Step 2. Look down at your LWTI indicator panel. The trend line must be completely green. If it is red, the premise is invalid and you stay out of the market. Step 3. Check your volume bars. The current breakout volume must print a green bar that closes completely above the white 30-period moving average. This confirms true institutional momentum. All three of these specific variables must align on the exact same candle to trigger an entry. For your risk management, enter at the close of the trigger candle. Your standard invalidation point will be placed directly below the middle orange baseline. Once your risk is locked in, project a strict 2-to-1 risk-to-reward ratio for your take-profit target. The blueprint for short positions works in the exact opposite direction. First, price must print a clean touch against the lower red Donchian band. Second, the LWTI line must be completely red. And third, your volume bars must print a red bar that surges cleanly above the white moving average line. Set your hard stop loss directly above the center baseline. Target a clear 2-to-1 payout and let the math run. Now, let's discuss the advanced filtration technique that takes this strategy from good to incredibly accurate. Even when all three indicator requirements are met perfectly, a breakout can completely fail if it occurs directly into a major, higher time frame resistance zone. The indicators will signal a buy, but institutional sell orders resting at that legacy level will instantly reject the price, handing you a loss. To eliminate this vulnerability, you must employ a multi-time frame approach. Before taking any scalping positions on the 5-minute chart, zoom out to the 1-hour time frame. Map out your macro support, resistance, and key supply and demand zones. Once those institutional levels are marked, do not execute any breakout trades directly into them. Instead, the absolute highest probability setups occur when price uses this strategy to break completely through a macro resistance level. When indicator confluence aligns with a major structural break, the bullish momentum is unstoppable. If you pair this volatility breakout system with pure price action and structural key levels, it becomes a lethal combination for any funded trader. Drop a comment below if you are going to implement this strategy on your watch lists this week, and click on the next video to learn exactly how to map out the perfect institutional supply and demand zones. I'll see you in the next breakdown.